With me for a moment while I briefly recap this concept for anyone new who's tuning in. When it comes to new technologies that shape and change the world, the S-curve is the gold standard for understanding how quickly they're adopted by the public. It's a widely accepted concept taught in economics classes and MBA programs. So for an example, here's an S-curve showing how broadband internet was adopted in the United States. Now I want you to pay attention to two parts of the chart. First, look at how long it took for the internet to be adopted by just 10% of the US population. You can see it was about 8 years, right? But then if you look here where it goes from 10% to 90% adoption, that also happens to be about 8 years. See how the trend line turns vertical when it crosses the 10% line? Now, at first glance, this might seem like a coincidence, or you might think that this situation is just unique to broadband internet. But what's interesting about this relationship is that it is held constant for almost every major technology innovation in the last century.
So Eric, you're saying the time it takes for a technology to go from its creation to a 10% penetration is typically the same amount of time it'll take to be adopted by 90% of the population?
That's right. Here's the S-curve for mobile phones. 14 years to 10% and about 14 years to 90%. And it's no recent phenomenon either. It happened the same for automobiles a century ago. After hitting the scene in 1900, it took until 1914 for cars to hit 10% of US households. But over the next 14 years, by 1928, automobiles were in 90% of US homes. So in short, this 10% mark, that the amount of time it takes to get to 10% market penetration, it's usually the same amount of time it takes to get to 90% market penetration. Now, what I'm about to share is a really critical thing for everyone to understand. Last summer, I did a presentation like this one with Stansberry Research founder Porter Stansberry. And I made a big deal about this chart showing that penetration had just hit 10%.
Yes, and you predicted we'd see adoption accelerate.
Yeah, absolutely. So it took 10 years from when Bitcoin was created in 2010 to hit 10% adoption in 2020. And I predicted we'd see 90% adoption by 2030 or sooner. Well, guess we are where we are today, just 12 months later.
Well, if it took 10 years to hit 10%, I'm guessing maybe 11% or 12%?
Well, take a look at the same chart I just showed you before. Remember, this is just 12 months ago. Now, take a look. A survey from the New York Digital Investment Group conducted in May, so very recent, estimated that 46 million Americans own Bitcoin. That's about 17% of the country's total population. In other words, in the last year, adoption of Bitcoin nearly doubled, which means that the same number of people decided to buy Bitcoin since this last year than in the entire decade before that. I should also point out that rate is double that of the internet from 1990 to 2000. So this is the fastest pace of adoption of any technology in history.
And I suppose it's really not surprising that so many new people took an interest in the space over the last year, considering how much money the government has printed and how many people are worried about the massive jumps in inflation we're seeing across the economy. But I have to ask you, Eric, I understand that all these new adopters helped drive Bitcoin to incredible heights. It reached an all-time high of more than $60,000. But today, it has definitely pulled back. Is this the beginning of another big 80% or 90% crash like we saw after the peak in 2017?
I think we're in a totally different place today. Let me explain why. Every real booming innovation has two parts. You see it again and again. And in recent years, it's been happening so fast over and over again that anyone can see it. Every big innovation has what I'd call a speculative frenzy followed by a fundamental boom. The speculative frenzy doesn't depend on fundamentals, but rather investor psychology. If you have your ear to the ground and pay attention to what people are getting excited about, you can catch these waves and ride them for big money, but then they crash. However, when you've got a real innovation or new business, something that really does make sense, a few years later, it comes roaring back in a big way. This time the boom is based on real revenue and real earnings that reignites excitement for the technology and it attracts another wave of investment. More important, the fundamental boom typically leads to huge multi-decade trends as new technologies take hold and real businesses are getting built and fortunes are getting made. It's a perfect pattern that anyone can see. For example, do you remember the green energy boom in 2006 and 2007? It was totally premature. Solar and wind were nowhere near working. But even so, a speculative frenzy caught hold and the S&P Global Clean Energy Index tripled in a frenzy before collapsing. Compare that to the situation today. Renewable energy is booming again, but it isn't booming based on pure speculation this time. Renewable energy has become cost effective and becoming a huge part of our energy production. It's caused the index to triple off its bottom again. Or simply think of the internet. You probably recall how in the late 1990s, people thought we'd do everything on the internet. Order goods, buy pet food, hang with our friends. They bid up stocks to ridiculous levels. And when they fell, everyone laughed at how silly they were to think we'd do those things. Of course, they were exactly right about everything. Now, most investors might have lost money on the speculative frenzy in 1999 and 2000. But all that money that flooded into the sector, it didn't disappear when the market crashed. It was this capital that internet companies used to create real businesses with real earnings and incredibly disruptive business models. And that led to the fundamental boom, which has driven technology stocks higher and higher and higher, essentially for the last 20 years without stopping. Well, the same is true for Bitcoin and blockchain technology. Remember how people went completely bonkers for Bitcoin in 2017? They drove Bitcoin from essentially $0 to $20,000 before the whole thing collapsed. But here's the thing, they weren't wrong about the potential for the technology. They were just early. Fast forward 4 years later to today, it's on fire. The speculative frenzy brought Bitcoin to $20,000. The fundamental boom brought it to $60,000. The interesting thing here is that oftentimes the first bubble is what leads to the real boom. The internet boom was crazy, but it raised tons of money. That money built the internet infrastructure that was necessary for there to be cheap bandwidth for things like Netflix and Amazon to actually work. The same was true of the Bitcoin frenzy in 2017. It helped attract capital for developing blockchain infrastructure that is now allowing the industry to disrupt massive industries like banking and finance.
So if this time the booming price of Bitcoin is based on true fundamentals, why has it pulled back so far?
Well, as I've said time and time again, if you believe in the technology of Bitcoin and you believe it in the long term, volatility is something you just have to get used to. And the volatility we're saying today isn't out of the ordinary. Consider when Bitcoin had its first big run to peak at $20,000 in 2017, it had 6 separate corrections of 30 to 40%. So to me, the pullback we've seen recently is par for the course. When you have an asset that has a compounded annual growth rate of 200% per year like Bitcoin has since it was created, you have to expect volatility. Yes, there are risks. There's no guarantee every new technology or business will experience growth this way. Many of them simply don't make it. But I want to explain why I believe this is an incredible investment opportunity. But I also want to make an important point. If it wasn't for this pullback, I'm not sure we would have been able to launch this new research service at this very moment, because this gives us an opportunity to get in today when prices are low, and more importantly, at a moment where we can lock in even bigger yields than we would have been able to get earlier this year. If you haven't ever invested in Bitcoin or other cryptocurrencies, then I bet this spring you're probably looking at Bitcoin prices climb 40,000, 50,000, and especially when it hits $60,000, and you were thinking, man, if the market ever pulls back and I get a chance to buy at $30,000 again, I'm going to push a lot of chips into the middle of the table. But I also bet that even though you now have that opportunity, you're thinking, well, maybe I'll wait and see if I can get in a little bit lower, right? Well, I'm here to be your wake-up call, because now is that moment. Don't wait a moment longer, especially because now you have a way to not just buy and hold onto an incredible asset like Bitcoin, which easily has 10 or 20x upside from here. But you could also be depositing that asset to make 10 times, 20 times, or 30 times more income than is available to you anywhere else.
Now, just a quick reminder that when you sign up today,